It's been 5 calendar days and 3 trading days since UK voters decided to leave the European Union. There's been a lot of volatility and big swings in the markets over the last couple of weeks, both before and after the vote. And now that things are starting to settle down a little bit, it seems like a good time to take a look and see where we've been and where we could be heading. So I'm going to start off by looking at GBP US dollar, or cable, and it's been particularly volatile. Look at this. For most of 2016, it was trading between about 140 and about 148, and it seemed at the time that 140 was pricing in a Brexit, about 148 was pricing in a Remain. And we saw this here between the middle of May and the middle of June. As Leave was gaining momentum in the polls, we did see this slowly starting to price in the increased potential of a Brexit. Then in the last 2 days of the campaign, we had this wild head fake reversal that sent the cable up from 140 to 150, even peaking above 150 as late as when the votes were starting to be counted. And this we had the street speculating at this point that Remain would win. We had the polls telling us it was going to go to the wire and it was going to be very close either way, and we ended up with a small Leave win, and that's why we ended up with this massive reversal in the markets. The street got caught way out offside on this one, and so we saw the market plunge. But since then, we've seen things starting to stabilize. In between Friday's close, the Friday close near 136.25 and the Friday intraday low near 132.25, we seem to have a trading support range starting to emerge here. Yes, we did have this one dip down here to about 131.10, and it is possible before this all washes out you could see the 130 round number being tested, since we're within striking distance. But overall, this is starting to look like it's stabilizing a little bit. We see the width of the candles has been decreasing, showing that that the bulls and the bears are coming back into line, and we're seeing this level here start to attract some support. We are getting oversold on the RSI, also suggests potential for a trading bounce, but so far it's been fairly feeble. First resistance here around 134.15. We are seeing significant action in other pound-related pairs. So I'm going to look at the pound versus the yen. And we're seeing the same kind of pattern here, where we had this general move towards pricing in Brexit, the mistaken rally here, the big head fake of people that thought Remain would pull it out, and then the huge plunge when they proved to be wrong. But look at this again. We're seeing within this range between the Friday low near 133.35 and the Friday close near 139.35. We've had 2 inside days now where we're seeing these low trading suggest consolidation, and again working off an oversold RSI. If we're wrong and this is a pause within a downtrend rather than a base building, you could see it plunge down to retest the 130 round number. If it did start to move up, then it's the 140 round number could be the first initial significant test. Looking at Euro Pound as well, we did see here, this is the flip side of it, of course, this spike was euro strengthening against the pound here. We did see quite a shot up close to 84. It's now starting to roll over a little bit as well, and again overbought on the RSI. So these massive moves that we had in the pound do look like they've gotten a little bit overdone and overextended in the short term. We're starting to see a trading correction back the other way. The other thing, though, that this did, the big sell-off in the pound did, was it made UK stocks a lot cheaper. It's important to remember a lot of the stocks in the UK 100 are big global multinational companies with operations around the world that aren't completely, and a lot of resource producers as well, whose results are more sensitive to commodity prices than the pound again. And what's happened to these stocks? They've suddenly gotten a lot cheaper relative to their peers because of the pound coming down so dramatically, so quickly. And interestingly enough, that's what we're starting to see this recovery here, where we had this initial surprise drop along with the pound. But look at the last 2 days, whereas the pound has kind of leveled off, the FTSE is actually, in the UK 100, is actually starting to recover here. And I think that's because people are recognizing that UK stocks have become a lot cheaper. Valuations have come way down, and I think we're starting to see some bargain hunting here. We had this one overshoot down to about 57.25. Really, support had kicked in over the last couple of weeks in and around 5,900. We're back above 6,000. First resistance around 6,200 in the 50-day average, then around 63, 63.30, and the big one, of course, this channel top is up around 64.50. Now that we've moved past the initial shock phase where people have had a chance to recognize what happened, to digest the voting, we could still see more volatility in the market, but at the same time I think we'll also see more of a sideways trend emerge, particularly over the next couple of months. Cameron is resigned, Osborne's not going to run for leader, there's going to be a leadership contest for the Conservatives and possibly also for the Labour Party as well, so nothing's really going to happen on the Brexit file before the new Conservative leadership comes in September at the very minimum, and then who knows after that. There's rumors that perhaps an election could be called, or what have you. The EU seems to want to push this along fairly expeditiously, but the UK and some other EU leaders, particularly Merkel, don't seem to be in a hurry to rush headlong into anything, are more interested in having a proper orderly process where people have a chance to reflect and make the best decisions. So in the near term, I think we'll still see some choppiness, but some of the bigger swings we've seen probably may subside a little bit and back towards more normal trading for the next while.